Welcome to Unfoolish Investing, everyone, where we cut through the noise to bring you the smart takes on the markets. Today, we're going to start off with something a little depressing, Larry. You know where I'm going?
I think I do. You're going to talk about the declining stock market.
10 days. 10 days. It's been 50 years, Larry, since we've seen the market streak like this. Not a positive market streak. We've had a lot of those, but 10 consecutive days of declines. The last time, 1974. 50 years. 50. Is that not insane?
It's insane. I think it's overblown, but I would agree with you that it's a notable stat.
What's going on?
Apparently, people thought the interest rate cuts were going to happen forever.
The market, the market's been struggling. Rising bond yields, persistent inflation concerns, increasing geopolitical tensions. Looking at you, Russia, Ukraine, Syria, the entire Middle East.
Yeah.
Every year.
Just the Middle East.
Say the Middle East is all. Middle East.
The whole thing. Yep.
I feel like investors are a little jittery, especially today.
I would agree. It's easy to just if you're a newer investor, or even me, I check my stock portfolio every day. It's fun to check your accounts every day when the market's doing well, and you're like, yeah, it's going up. And it's natural to feel nervous when your portfolio goes down, especially 10 days in a row, like it has, like the indexes have. But you got to have the same mentality as you have when it's going up, and that you just got to stay in it. And maybe there's buying opportunities out there, maybe not.
It's true. And today I felt like all eyes were on the Fed's decision, and they didn't disappoint, pretty much depending on how you look at it. First off, the Fed decided to cut by what?
Quarter point,
which brings it to a full,
what is it,
100 basis points this year. But I feel like the real story in their announcement was the future. Hey, guess what's coming in 2025? Not regular cuts. And the market lost their mind. Now, will they unlose it after they get a good night's sleep? Maybe pop an Ambien, relax a little, wake up in the morning and they're like, what do we do? What did we do? I feel like the banks got slaughtered. Not one bank.
Every bank.
All of them.
Yeah.
They absolutely got hammered. Higher borrowing costs are going to pretty much keep the brakes on consumer spending for especially the high profit stuff. I feel like corporate profits are under pressure, especially those with higher debt costs. And, if the banks aren't lending because the rates aren't going anywhere, the housing market remains what? In limbo. Affordability continues to be at record lows, Larry. High mortgage rates. This is the one stat that blows my mind before we jump into the next area. But the Fed continued to cut. Mortgage rates haven't moved. If you want to get a HELOC, that rate's moving. But if you want to go get a mortgage for the first time, those rates haven't been coming down.
It's a problem. Affordability is a problem. Supply is a problem. There's not one thing affecting the housing market. It's a multifaceted problem.
I agree. And I think that over the next 24 to 48 hours, people keep on talking. I even did a little short on, 1978. We're down to 1974. 70s keep on popping up. Because there are a lot of parallels that I feel like are striking. Back then, the S&P was down nearly 30% for the year. And the economy was really in the stagflation world with, stagnant growth, high inflation. Talked a little bit about
rationing oil.
When can you go get gas for your car? Odd day, even day.
Yeah, depended on the last digit of your license plate in most states, yeah.
But I feel like this is the key difference. The economy today, I feel like, is far more resilient. Employment remains strong, despite what the media is saying. Ignore the media. They're probably trying to sell somebody something for ad time. Ignore it. Garbage. The economy is resilient. Employment is strong. And the tech-driven productivity gains of the last few decades, I feel like, have provided such a buffer against that economic collapse that occurred in the 70s.
Yeah, I mean, I think part of the resiliency of the economy is there's a proven history of the government willing to spend its way out of problems, economic problems. I think that has a lot to do with it. Like, if you look at the housing, it was the housing crisis in '08 that turned into an entire economic collapse. You know, the government had to step in. COVID, same thing. The government had to step in. So I think that's part of the American economic story at this point is when the economy is in trouble, the government will back you up, which provides a limited floor.
I agree. And, I'd just like to finish by saying, unfoolish investors, staying calm and focused on the long term. Larry and I talk about it all the time. We don't panic at times like this. Selling during downturns does not help you. It just locks in those losses, and that's not what we do as unfoolish investors. We need to continue to stay diversified. If you see a particular stock that you've been looking for drop 10, 20, 30% in these times, that's buying opportunities. Those are the times that we need to look for those buying opportunities and bargains, because as patient investors, that's when the money's really made, Larry, right?
Yeah, there's way more money to be made in a declining market than, a market soaring at its all-time highs, which it has been really for the last couple of years. So yeah, stay patient. If you're getting nervous too about individual stocks, maybe you just stick to buying indexes while the market's going through that volatility. You don't have to pick stocks. You can just pick the whole stock market.
It's true. OO, QQQQM, buying those two. Maybe if you want to shut down a couple of drips in this time and just put it into those indexes, you will never go wrong with buying the NASDAQ and buying the S&P 500 long term. And on that note, we're jumping into today's main episode, Larry.
Here's the main event.
And you know what that is.
I want you to tell me. I know what it is, but I want you to tell me. I love your intros.
It's the cutting edge world of AI semiconductors, folks. The chips that power the AI revolution, the companies leading the charge, including you, NVIDIA. Yes,
I could see the pain in your face saying those words.
Taiwan Semiconductor, Broadcom, AMD, Intel, Marvell. We're going to break it down. We're going to look at performance, challenges, opportunities. Let's jump into it with my favorite stock.
Gotta be NVIDIA, your all-time favorite stock, number one. You own 1 billion shares.
Outside of that, VOO, I do not own this company at all. I could be completely foolish for it, but, it's not one. It's one that I've sold already and locked in my profits. But, it continues to run, and, God bless it. God bless it for everybody continuing to buy in. But NVIDIA.
You will probably have two different you'll get two different perspectives on this episode, folks, because Victor doesn't own any directly, and I think it's my biggest holding at this point. So, good contrast here, because we do agree on a lot of things, but this is a good contrast here.
NVIDIA's stock performance as of late has seen some turbulence. I mean, shocked at that after peaking at $153 a share in November, but recently dropping about 15% to 130-ish. The decline might look worrying, but I feel like you can expect this level of volatility in a growth stock pushing AI chips, pushing chips overall at a valuation that, to me, makes absolutely no sense. No sense. I don't even know how anybody gets to this valuation, but God bless everybody. God bless NVIDIA investors, because wow. Wow, when I say, like, I think NVIDIA, if they stopped right now, it may take them 20 to 30 years of profits to reach the valuation that they've grown this company to in a matter of 3 years.
I will agree with you that the valuation is like price to long-term perfection. You hear that, you hear the term, oh, the stock's priced to perfection. That generally means for the next 12 months. I would agree with you that this stock is in that 10-year range of they have to perform flawlessly. And so far they have, for the most part, generated triple-digit returns. Quarter over quarter, I think, except for last quarter, which was in the high double digits, which any other company on the planet would drool over. But not NVIDIA because, of the sky-high valuation. I wouldn't look too much into the short-term performance. 5 years, it's up 2,000%. And year-to-date's up 167%. So it's not looking too bad from where I'm sitting. I think my personal hold, I'm up like maybe 900%. But I still believe in the company. I don't think there's a company that's really remotely close to cannibalizing NVIDIA's business. And I think NVIDIA is trying to move from not just the chip supplier. They're moving into that data center space that AWS has had kind of a stranglehold on for the past few years. And Microsoft as well. So I think there are inroads to be made. I think they're using all this money they're making wisely to try to diversify the business while they're so valuable. But I do agree with you. I would expect some volatility ahead for the foreseeable future.
Now, I don't want to poo-poo on anything.
I think you love poo-pooing on NVIDIA. Actually, I think it's one of your favorite things.
But I will say that my take on NVIDIA is, yes, could they do all these amazing things? 100%. Is the stock price to perfection? 100%. But I've seen this before. I lived through Cisco. I lived through the world of data center build-outs, office build-outs. Everybody needs switches. Everybody needs server rooms full of Cisco equipment. We need IDF closets filled with Cisco equipment. The internet is here. We need to build this out. And do you know what happened? Cisco at one point became the top company in the world. And then they went flat for 20 plus years. They're still knocking it out, making money. They're not going anywhere. But there's only so many data centers and switches that can be purchased. And then Dell got into it. And then HP gets into it. And then everybody else starts like, we can make money on this. So now you have all these other companies making the same equipment that Cisco made, and it continues to shrink. And again, they're killing it. They're doing really well. But that piece of the pie that used to be 70, 80, 90% continued to shrink. And that's what, when I'm looking at NVIDIA, that's the train I see. I really see parallels to how Cisco was. And God bless everybody that continues to stay in NVIDIA and believe in it. But for me personally, I'm taking my money to Taiwan Semiconductor.
I'll say this. I believe in the company long term. Do I think that in 10 years, they'll have the same market share that they do today? No. I think there's a lot of money to be made between now and 10 years from now in NVIDIA. And one thing I think we should do now that we've started down this road is I think at the end of this, we should pick, if we had to buy one of these stocks, which one would it be and why?
We can do that.
We go over. Because I do think there's some differentiation between the stocks we're going to discuss in this episode.
And moving on to number 2 for me, and where I would prefer to put my money currently over NVIDIA, and that is Taiwan Semiconductor. For me, they're the world's largest contract chip maker. They manufacture the chips for NVIDIA, like for AMD, for Broadcom, making them, to me, the cornerstone of the AI revolution. And if something happens to Taiwan Semiconductor, there is no NVIDIA. Like, the NVIDIA can't do it without Taiwan Semiconductor, where I feel like if NVIDIA went away tomorrow, just another company would come in and be like, Taiwan Semiconductor, we'll take those slots. You just continue to, Apple would jump in there. Microsoft would jump in there. Amazon would jump in there. Like, to me, all roads lead to Taiwan Semiconductor, and one of the next stocks we'll talk about is another one that is also tied to Taiwan Semiconductor. But it's like, that to me is the cornerstone of the chip world in the AI revolution. And I think that if you were to invest in only one AI stock, Taiwan Semiconductor would be it for me. 100%.
It's one of my favorite stocks. I agree with you that it's the underpinning of, like, not even just NVIDIA, like the entire chip. Anything that has a microchip in it is coming from Taiwan Semiconductor and or ASML Holding, which makes the lithographs for most chips. I really think the only thing that's keeping Taiwan Semi from doubling is the geopolitical risk associated with Taiwan. You know, the threat of China, taking Taiwan over, is a huge, fear factor for a lot of investors. And it's why Taiwan Semi has started to expand outside of Taiwan. As part of the CHIPS Act, they're building a foundry plant in Arizona. They're building a plant in Japan. So they are trying to diversify themselves out of that risk. But I agree with you. It's one of my favorite stocks.
I'm putting it out there right now. I see, if you are going to put your money into only one stock for the next year and you want a 30% return, Taiwan Semi would be it for me. That to me is all lock it in, 30% higher from today's close over the next year. Because if all these companies are blowing up by selling chips, all those chips, that yellow brick road of silicone goes right back to the front door of Taiwan Semi. Moving on. Initially, I was going to, talk about ASML next, which I do think is important. So I think that, to me, ASML is tied to Taiwan Semi, and Taiwan Semi is tied to ASML. And I feel like if you're going to break that Taiwan Semi investment into two companies, and you want to double down on complete control of that foundry, of the entire semiconductor creation, half your money goes into Taiwan Semi, half your money goes into ASML.
Yeah, this is one of my favorite stocks too, ASML. I've been adding to it pretty heavily the last 6 months or so, which, it's down 30%. But I think ASML is more prone to a cyclical business than Taiwan Semi. So I do think that ASML, kind of is a victim of the business that they are in. And people put in orders way in advance. So you can kind of forecast out better with ASML, the ups and downs, as opposed to Taiwan Semi is much more consistent. So when I see ASML down, I tend to buy it because I think long term there's nowhere for it to go but up. I think it's down by half from what it should be. I think that fair value for that company is probably $600 billion, which I think is double from where it's at today.
And I just want to give Unfoolish investors, I did not give them a little background on ASML. They are based in the Netherlands. I actually think they might be the largest company in the Netherlands and have the most profit of any company in the Netherlands, including the Netherlands. And for me, they're the leading supplier of photolithography equipment, which basically means that ASML specializes in extreme ultraviolet, and the technology is critical for the manufacturing of all those advanced semiconductor chips. So without the lithography systems
Mm-hmm.
that ASML puts out, Taiwan Semi, and it can't create the chips that NVIDIA needs for their high-end AI systems. So you kind of see the pipeline come together where Taiwan Semi needs to buy equipment from ASML or have them do the work in order to get NVIDIA the chips. I feel like the only reason NVIDIA is priced and valued so much higher is because they can add that much more profit margin onto what they're selling the consumer and I feel like that's going to catch up. I feel like Taiwan Semi, ASML are going to be like, hold it. You're pulling in all these record revenues. We can be charging you double and you can pay it. And I feel like that, to me, is that Netflix lever of being like, oh, we need to make more money next year. Okay, we're going to raise all the prices $1. $1 across 400 million subscribers a month is a lot of money.
That's
And
that's the Costco model, essentially, is the
yes,
membership fees is the entire revenue.
but Costco is unique in the fact that they typically only raise membership every 5 years. If you
Correct.
kind of look at them, Costco is
Correct.
like somewhere in the
5 to
five-year
6
range.
years, yeah.
5 to 6 years, they're like, oh, we're going to tweak prices. And then they don't do anything for 5 to 6 more years. Which I think that the consumer's like, oh, okay, that makes sense. Like, I don't mind paying more. It's been
Mm-hmm.
5 years. But
Yeah, if they were doing it if they raised it $5 a year, I think there'd be more pushback to that, as opposed to, to your point, every 5 years. It's a little bit of a mental game where they're like, I feel like I've gotten such a good value out of Costco. I don't mind paying another $5 a year.
it's true. And I feel like from ASML's standpoint, I feel like they have demonstrated continually strong financial growth. They have insane consistency when it comes to revenue, especially with the global demand around the chips. And their profit margins aren't as high as NVIDIA, but they still exceed close to 50%, which just continues to say, hi, we're in this niche market. You need us. We're going to continue to be profitable. So again, if you see a 30% cut on ASML stock, double down.
Which has happened
That
in the
is a
last
double
6
down.
months.
What?
Which has happened in the last 6 months. It's down 30% in the last 6 months.
That's a double down because they're not going anywhere. They're needed.
I am stunned at your analysis because I feel like you and I had this conversation privately like 2 months ago, and you thought I was nuts. What has prompted the turnaround on your point of view for ASML Holdings?
That niche to me is been the big thing that I've been looking at, and it's been the opposite with my negative on NVIDIA.
Mm-hmm.
And the other thing is ASML doesn't quite report earnings the same way as every other company,
They do not.
which, you could get much larger. So you could have a downturn of 30%, and you're not going to get that renewed numbers until the next earnings, which is much further apart. And I'm not sure if it's because they're in the Netherlands or this is just how they do business as a company. But ASML follows the calendar year. But again, when's the next earnings report for them?
January 29th.
When was the previous one?
Not as October 15th.
So
10% earnings beat EPS.
and they continue down. So again, for me, I'm buying in. I love the niche. And that's what I'm buying into. That's my pivot on that is I'm not sure how the AI sector is going to unfold, but I am positive around semiconductors are going to be needed. Whether or not it's AI, refrigerators, cars, whatever it might be. And for that, Taiwan Semi is going to be there. ASML are going to be there. So when I'm looking at core stocks that I trust, are not going to have potential of a wild swing. Those are two companies that I think are in it for the long haul, going to be continue to be in it for the long haul, because I don't think ASML has a competitor. I don't. I
No.
haven't found anybody that can even
Nope.
come close to doing what they do. And if Boeing and Airbus are a duopoly,
Yeah.
ASML is a true monopoly in what they do.
Yeah. I mean, ASML is the monopolizer of the EUV lithography equipment, just the way Taiwan Semi is in their market. Even more extreme, because there are alternatives to Taiwan Semi to an extent. There's really no alternative if you want the cutting, bleeding edge equipment. You have to go through ASML. They're the only company that does it. Period.
Correct. And I'd agree to a point with Taiwan Semi that there are other competitors, but they're typically handling much lower end chips.
Yes,
You
the
know,
technology's not the same.
and I think that to me is the big difference. And on that, I'm gonna jump on over to Broadcom. Why? They recently crossed the 1 trillion market cap.
Are you a Broadcom bull all of a sudden? I feel like I'm in the bizarro world here. I don't know what's
So
happening.
Broadcom's an interesting one for me. My story around Broadcom is I no longer own it. I used to own it years ago. Fun story around that. I was an entry level PC tech, and we got a new batch of Dell laptops in, and they had Broadcom NIC cards in them, and I was like, huh. I'm like, wait, this Broadcom company's popping up all over the place, and we're going back years, folks. And
Back when
that's when I started
PCs
looking.
had floppy drives.
And that's when I started buying into Broadcom. I wish I held all these years. I do not. I still am a little taken back on the AI boom, just because I feel like there's a bubble that's coming to a head at some point. I don't know when it is, but I really feel like there's something that people are going to be like, enough. And we'll talk about it in another episode. My play on the AI industry isn't as much around the tech as nuclear energy and uranium. And for me, we're going to do a separate podcast coming up that's going to discuss that. And that's my AI play, is to watch how all of big tech works insanely fast to mitigate the power consumption by building these small nuclear reactors in order to power their massive AI farms. But that's that. I won't. Broadcom. I think Broadcom, had you been buying into it for the past year and a half while everybody was on the NVIDIA, you would have cleaned up. Looking at you, Larry. I think that to me is where a lot of times investors lose sight. They're like, oh, everybody's buying NVIDIA, and they're like, NVIDIA is the only one that can do this. And they're not realizing that there are other companies out there that make these chips. And if everybody can't get the NVIDIA ones, they're going to start looking at other companies like Broadcom to bring that to you, like AMD, like Marvell. Like, there are other companies out there that do this. What made you buy into Broadcom other than you were ridiculously overweight in NVIDIA and needed somewhere to put all your riches?
So when I invested in Broadcom, which was 2019, 2020, I invested in a broad basket of semiconductor stocks. So it was Taiwan Semi, ASML Holdings, Broadcom, NVIDIA, Applied Materials. I think that's it. I'm probably forgetting something. But it didn't really stand out to me, particularly Broadcom. It was just part of my diversity play in the semiconductor space. So I can't say that I had some sort of foresight that NVIDIA was gonna, or that Broadcom was gonna go up, 300%. It's actually, it's 600% in the last 5 years. I didn't. I just invested in chip stocks and got lucky.
Did you get lucky, or did you do what we talk about in the Unfoolish way when looking at stocks? You hedged by buying a basket. You mitigated your chance of loss across all of them by buying into a larger group. Maybe one of them wins, maybe several of them win, maybe they all win. You just don't know. But had you not bought that basket, you wouldn't have had Broadcom. You wouldn't have been able to be patient and be like, well, it's kind of moving along. And then it takes off.
Yeah, I mean, I guess to your point about it not just being luck, there was some strategy involved. Because if it was just luck, it would have been I'm just going to put everything in one of those and hope it goes up. Where diversification is what saves you in downturns.
It's true.
Diversification and time.
Yeah, and I feel like you created your own ETF. Much smaller. You use the basket approach 4 versus potentially 10 to 12, which would be in an ETF, sometimes more. But I think what you did was smart. And it shows the unfoolish investors that using that basket, trusting your research, and buying in for that 3 to 5 year term can pay off. It just doesn't have to be one stock. The patience, and if one takes off, you're like, why isn't this other one moving? And then finally, everybody's like, oh, and then they all jump on. And that's what happened with Broadcom recently is everybody finally realized NVIDIA is not the only play. Look at Broadcom, and everybody decided to pull the Larry and jump in. And Larry's like, been here. Thank you for taking me up.
Yeah, I appreciate it, everybody. Not enough to retire, unfortunately.
The final company I want to talk about today is Marvell. Marvell is carving out again a niche in AI powered infrastructure. They're less well known than NVIDIA or even Taiwan, but are gaining attention due to their innovative approach to networking in data centers. Their recent acquisitions and focus on AI driven solutions, for me, make them a sleeper pick in the AI semiconductor space for investors willing to take a little bit more risk. I feel like Marvell could offer that big reward. What are your thoughts?
Yeah, this is the first stock that we've talked about today that I don't own, but I have heard a lot of good things about, and just for whatever reason, never invested in them. Maybe I felt like I had enough exposure in the semi space with what I had, but never really occurred to me to buy any. I really don't have much data center exposure outside of what NVIDIA, well, in Amazon and Microsoft, but that, we're talking about semiconductor specific stocks today, outside of what NVIDIA is trying to do. But I don't have any concerns about Marvell. If I were looking to buy into semiconductor stocks, it would certainly be part of my basket.
Yeah, I mean, if you look at Marvell over the last 5 years, they're up roughly 300%. Over the last, I would say, year to date, they're up 80%. They took off, I would say, similar to the same time Broadcom took off. It really shot up. I think over the last 6 months, they've been rocking somewhere into the 35 to 40% range. So they've had a consistent year. If you told me I could have only one stock and it would go up 75% for the year, I'd take it. I would 100% take it. And I think that their price to earnings ratio, is a bit high for me, which again, prices in that they don't, like, if they miss, it's one of those things that's going to get cut hard. But, I think their PE is sitting around somewhere between 140, 150, which again is on the higher side. But that's just saying that investors are expecting great things from them in the coming future. But just like NVIDIA, if they miss, you could get that price cut in half very quickly, very easily. But again, I feel like using the basket approach, you mitigate your risk into it. So for me, my basket is Taiwan Semi, ASML, Marvell, and one that I really love their gaming chips, and that's AMD. And those are my 4 in my basket. And if you said we could only have one, I'm not sure I could pick one, but I'd have to take Taiwan Semi. But I would really prefer to split that one, and I've talked about it exhaustively over this podcast, into 2. And that would be, if I had $10,000 ready to go tomorrow, 5 would be into Taiwan Semi, 5 would be into ASML, and I just look for, talk to me in 5 to 10 years.
I love it. If I had to pick two, I would pick the same two, ASML and Taiwan Semi, out of that handful of stocks. I will say if I could pick one, I would pick ASML. I think there's more of a lithography, boom ahead, where I think Taiwan Semi already has more of that growth priced in, where the cyclical nature of ordering the components for chips is what kills ASML's valuation. And I feel like once, I don't want to get into SoFi again, but kind of like SoFi, once people start really understanding how this company works, I know it's already a $300 billion company, but, I really think the valuation could go way up from here once there's a more broader understanding.
Yeah, and
so
just
for
to
me,
give
it's ASML.
Yeah, and to just give Unfoolish investors a look, ASML over the last 6 months, to Larry's point, is down over 30%. Year to date, they are flat. They are absolutely flat. And if you go out a year, they're down almost 4%. Again, if Larry's right, and he typically is, because he's the only human on the planet that I know of that picked NEO to invest.
Look at the price today.
You got out. Out.
I got
out. 3 to 300 or 60 or whatever it was, but
yeah, I was in the 60s when I sold. Yeah, and I bought it at like 3 something. So, it was a good run. Thank you, COVID.
But yeah, I would agree. So, ASML, Taiwan Semi, that's it. I mean, those two are niche. They may not be the sexy names that you hear all the time when people are on the media talking about NVIDIA, but they are safety nets with massive growth potential. And, for me, that's what I'm looking for. I'm looking for that massive growth without that risk that I feel like some of the other players have.
Yeah, I mean, the more we've talked about it in this podcast, the more I'm considering, maybe I should sell some of my NVIDIA because it's run up so much and put some of it in these underpinning stocks. I already have holdings in them, but to increase my holdings in them opposed to NVIDIA.
And I can't believe we just rambled on for 46 minutes, Larry.
As we get older, we just tend to ramble and time goes by, and maybe somebody's listening out there, maybe not, who knows.
But I will say that, the AI semiconductor stock world is going to be here for years to come. Companies like NVIDIA, Taiwan Semi, Broadcom, AMD, Intel, Marvell, ASML are shaping the future. I think we can agree on that.
Yeah, I think near term there's some China risk with not being able to sell some of their higher end technology to China. I think the new administration in the United States could have a play on the tariffs that could really start crushing some of these companies. I would look at that as a long-term catalyst to say, hey, if these companies really start getting hammered in the next, 2, 3, 6 months, and you have the ability to, I would buy into those because that's not going to last forever.
Agreed. And I mean, each one of the companies has strengths. They all have weaknesses, but most importantly, they all have a unique role in the rapidly evolving industry that is AI chips. Everybody needs to remember investing is in high growth sectors like AI requires patience and a clear understanding of the long-term trends. So I just want to thank everyone for jumping in today. It's been a while since we've been out. I've been in New York. You've been throughout Europe. We're back. We're healthy. We're in good spirits. Christmas is coming. I'd like to get an episode in before Christmas if you're watching then, so we can have our little, Christmas basket in 2025 coming up.
Let's pray for a Santa Claus rally. Let's
Amen.
just keep it going.
Here's my prediction. They're going to reverse tomorrow. Everything that happened today, it's going to be flipped undone tomorrow. And that will be the beginning of the Santa Claus rally that will go today through the weekend, Monday, Tuesday, and we're off.
Yeah, I see parallels to the CrowdStrike outage, except this time it's the entire market where people thought that this was just going to be the way it was forever. And it's not realistic to just keep cutting interest rates every month. So to then come out and say, oh, we might only do 2 or 3 cuts next year should not have been a shock to anybody.
I had somebody send me a message blaming Powell. Blaming Powell for talking. And I'm like, all I can tell you, Unfoolish investors, should you get to this point in the episode, and if you ever will, but it's like the end of a Marvell movie. Marvel movie. It's that secret scene. The market and the media want you to believe something. A recession is coming. They want you to believe this so hard that they're going to talk about it every day for years until the recession never occurs. Then they're like, we need something to pivot to. We've killed that. We've exhausted that. And then they're going to start talking about the soft landing. Or is it soft? Or isn't it soft? And then Powell's going to come out and be like, you know what? I think we're done cutting rates for a while. And we're probably only going to cut twice next year. And everybody's going to be like, what? What? How is this possible? Earnings didn't change, folks. Companies didn't report any bad quarters. Nothing negative coming. You don't know. But you have this sentiment that is built into this market that the media wants you to understand, and they want you to believe in the doom and gloom. And all I can say is, no matter how many times the market collapses like it did today, it always comes raging back. It may take a few weeks to get there, but it always goes up more than it goes down.
Yeah.
And people are like, oh, how do you know? How do you know that's not going to be different this time? Well, I have 40, 50, 60, 70, 80 plus years of data behind my thought process.
Yeah.
What do you have, an opinion? And I just, it's like the media. I mean, I'm just gonna jump in here. One cry. CNBC. Let's see what their top headline is right now. Powell says central bank to be cautious on rate cuts. Rocking market. Okay, the market went down 2, maybe 2.5%. They want to show this 1,100 point drop is massive. That's 2.5%. That's not even half of a pullback. That's not even half of a correction, which would be typically the entire market correcting, what, 10 plus percent, Larry?
10%'s a correction, yeah.
We're not even at 50% of a correction. We're not even at 25% of a correction. We dropped 2%, not because somebody said the economy was going bad, Larry, but because people were upset. They got their feelings hurt that there weren't going to be monthly rate cuts next year. I don't know. How many did they want? They want like 12? Were we supposed to cut every month? Was it like every quarter? Was 4 going to be enough? Like, what would have made them happy? Like, go to bed, pop your Ambien, wake up, and let's be rational adults. Let's be rational adults. And rational adults don't panic in these times. There, I said it. I'm exhausted. I just can't. Like, the media just drives me nuts with these, like, expectations where the Fed would cut rates. Lethal blow to the markets.
I said this in September when they did it was the first rate cut. It was a 0.5 point rate cut. It's almost like the market finally shifts to where everyone thinks it should be. It gets there, and then everything tanks temporarily. I don't see any cause for concern. I'm still buying stocks. I probably will never stop buying stocks because I just have too much faith in the U.S. stock market. I think the U.S. stock market will outperform.
I'm sorry,
over the long term. Go ahead.
The king, clown. Bye. Kramer is like, Kramer questioned Powell's assertion that the decision was a close call and suggested that looking for progress on inflation while cutting rates is a bit of an oxymoron. Like, who are you, Kramer? Like, seriously, you get paid to go on TV to tell people what? What? You should be telling them to relax, nothing be concerned. What we're telling them.
Yeah, I mean, I wouldn't call one dissent on the vote for a rate cut this month. I wouldn't call it close. And, I don't think there's a reason to keep cutting it every month. I don't think that, I don't think they needed to say anything, which I think is what some of the media stuff was getting to, is like, just don't say anything, just talk about the current conditions. But I don't think anybody should have been surprised by them saying, we're going to slow the rate of cuts. They've been talking about a soft landing for 2 years. We finally got to the soft landing. You don't just drop rates to zero because you got to a soft landing. You try to maximize employment and minimize inflation. Those are the two Fed mandates.
It's true. And we're just going to end like this. You ready? Market in full meltdown as rate cuts loom. How will we survive, Larry? How will we survive without mild anxiety about future hikes? How will we do it? Like, stop. Deep breath. We are long-term, unfoolish investors. We don't look at the short-term drops. We be patient. We're calm. And we turn off the ridiculousness that is the media in these times. And we look for stocks that are pulling back drastically for absolutely no reason. And then we do what Kramer says, buy, 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 buy.
We laid out our strategy in this podcast. So
it's true. And with that, that's all I got. I'll try not to break it up for 2 weeks because I come back, we ramble on. I am all amped up. Today is just...
Some of it's my fault. I started a new job. It's been crazy. Hopefully we can get on a little more reliably.
But with that, thanks for joining on Foolish Investors. We're here. Hit like, hit subscribe. Email us at unfoolishinvesting@gmail.com. We are here for you. Why? Because we are all about being patient, staying calm, and finding the buys for you, our unfoolish investors. So, till next time, have a great holidays. If we don't talk before then, stay unfoolish.
See ya.